Welcome back to WolfPack Cryptos and MMGinvest. So we're going to talk about Deutsche Bank, and then I'm going to do some quick TA on the stock market, precious metals, and Bitcoin. So first, let's talk about I almost said Lehman Brothers, which is essentially the same thing as Deutsche Bank at this point. Here we go. So Deutsche Bank has pretty much gone under. It used to be one of the biggest, it was the biggest financial institution in Europe up until the 2008-2009 mortgage-backed security crisis, because they were holding a lot of mortgages, sliced up mortgages. And then they couldn't even insure them, and then it just went under. So let me read a little bit of this. This is interesting. 1 month ago, Jeff Gondelak, in his latest double-line investor call, cracked jokes that Deutsche Bank's imploding stock, which has been hitting fresh all-time lows virtually every day, had major support at €0. And it's not far from zero, guys. Once again, he was on to something, because just a few days later, the FT first reported that the bank, which was this close to nationalization in 2016 and failed to consummate a merger with that other German bank, Commerzbank, was preparing to roll out Plan Z amid a deep overhaul of its trading operations. The biggest German lender was set to roll out a bad bank holding some $50 billion in legacy toxic derivative assets. That's €50. A plan that was quite popular in its depths of the global financial crisis. As we noted at the time, it would hardly come as a surprise that the German bank, best known for housing 43 billion euros, or wow, wait, no. This is derivatives, okay? Derivatives are just ETFs and loans upon loans and shares upon shares of the underlying asset. Just look into it. So 43 trillion euros in gross derivatives. That's that's trillion, guys. Trillion in derivatives. And people have talked about this for years. Once Deutsche goes down, it could cause the next global recession. And it's very real. So would stuff its bad bank, known internally also the non-core asset unit, with drumroll long-dated derivatives. More to the point, we said that while this bad bank plan was commendable, after all, admitting you had a problem is the first step toward recovery. It would fall far short of what is necessary to bring fenced from Deutsche Bank's legacy balance sheet. Today, Bloomberg confirmed as much when it reported that just 2 weeks after the original $50 billion bad bank plan was floated, the German bad banks has already grown by 60%, with about 75 billion and maybe as much as 80 billion euros of risk-weighted assets will form the basis of bad bank, a Bloomberg source said. At the higher number, that's equivalent of about a quarter of Deutsche's total balance sheet. It is also more than 5 times the German largest bank's market cap, suggesting that absent this critical structuring shape, Europe's largest bank by assets is now effectively insolvent. There's more. As Bloomberg notes, as part of the ambitious restructuring plan to be soon implemented by Deutsche Bank, there will soon be a call of top leadership, better visibility. And while the fact that at least 2 board members are expected to depart, blah, 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 German lenders' downward spiral. What is more shocking to Deutsche Bank's rank and file employees is that the number of workers to be cut has also grown in the past 2 weeks, rising from a prior range of 15 to 20,000 employees losing their jobs to 20,000, which at its high end means more than 1 in 5 jobs will be terminated. So this is very reminiscent of Lehman Brothers, right? At first, huge job cuts, like 1 out of 4 were getting laid off. Then one day just went under and everyone was just leaving the building, crying with their boxes full of, desk ornaments. As reported last week, investment bank chief Garth Ritchie will be quitting while departure. Yeah, CEOs are getting fired. According to Bloomberg, the mass layoffs will also include numerous executives, blah, blah, blah. Listen, Lagarde just became head of the ECB. This is also why they know this stuff before it hits the news, at least a week in advance, something like that. And this is probably why she was talking about negative interest rates are good for good for the economy, which it's not. It destroys the middle class. But and causes massive inflation, but and malinvestment. But the reason they're going to do this is to somehow save Deutsche Bank, which is, I don't know how they're going to save it. They just had a merger with another big bank, which also their balance sheet looks just as bad almost. Let me read a little more. Meanwhile, in separate report, Bloomberg also details the vast strategic transformation that is about to be unveiled by the bank just short of its 150th anniversary. As Deutsche Bank seeks to return to its roots as part of the overhaul, Deutsche Bank will sever many ties with institutional clients, one of the bank's key income sources, while seeking to boost its appeal to domestic corporations. Which I highly doubt. So here we go. The decision to pull the plug on a big part of the securities trading effectively ends a 30-year effort to become a global trading powerhouse that kicked off when Deutsche Bank took over London-based investment bank Morgan Grenfell and culminated the Edson Mitchell, who joined the bank in 1995 as head of its global markets organization and took it from also ran in trading bonds and securities and foreign currencies to major and highly profitable player in those activities. They're pretty much not trading anymore. Like, they're done trading. They're done buying stocks, selling stocks, and all of that. Because you have to understand how these banks work. So this is how these banks work. You go to the bank, you take out a home mortgage, and the bank only needs 10% to collateralize like $100,000 because of the overnight bank lending fee interest rate, right, which is set by the Fed, by the central banks. This also ties into negative rates. So the bank only needs $10,000 to loan out $100,000 to you, who is taking out a loan to buy a home. So they made 90,000 fiat currency or dollars or euros, whatever, into existence. That didn't even exist. All right. And then they gave out that loan, and now you're paying back that loan with interest, and people are depositing money into the bank, and the bank takes the deposits, leverages them up, and goes and buys stocks with it. And that's how we get a stock market bubble. And on top of that, they do derivatives, which is insane. It's like leveraging up 100x on everything. And then there you go. You have a stock market bubble. In Europe, there isn't even a stock market bubble. There, it's been falling. It's only in the U.S. at this point. On top of that, back in 2008, they were doing mortgage-backed securities, which is they lend out, all these mortgages. Then they slice them and dice them. They put insurance on top of it, and then they sell it out into the open market. And then other banks buy it, and then some hedge funds buy it, idiots buy it. Your average person buys it too because they invest with these IRA, 401k retirement plans and pension funds buy it, and it just becomes a giant collateral systemic risk and Ponzi scheme. And that's what happened in 2008, but it's back. It's already back. We're doing it again. And now Deutsche Bank is like fully imploding here. So here we go. So will the latest wholesale restructuring help Deutsche Bank become viable? Probably not. JP Morgan recently estimated that Deutsche Bank's U.S. operation was losing 25 cents for every dollar of business it does, and its globally equities business alone loses about 600 million euros annually. That's a lot. It's almost half a trillion. Or no, it's almost half a billion. There is one final problem. In the summer of 2016, just a month before fears about the viability of Deutsche Bank sent its stocks screaming lower, and prompted Angela Merkel to discuss whether or not Deutsche Bank will be nationalized, the IMF found that Deutsche Bank is the bank that poses the greatest risk to the global financial system. And you know who used to be in charge of the IMF? Christine Lagarde, who is now in charge of the Central Bank of Europe. So it's pretty much Ben Bernanke of Europe. That's what I'm thinking. Network analysis suggests a higher degree of outward spillovers from the German banking sector than inward spillovers. In particular, Germany, France, and UK and the US have the highest degree of outward spillovers as measured by the average percentage of capital loss of their banking system due to banking sector shock in source country. Here is the IMF's chart showing that the key linkage of the world's riskiest bank. I mean, you can see Deutsche Bank is intertwined with Mitsubishi, Bank of New York, Mellon, JP Morgan, Goldman Sachs, Bank of America, Morgan Stanley, Citigroup, State Street, Wells Fargo, HSBC, Standard Chartered, Barclays, ING, RBS, UBS, Credit Suisse, Nordea, United Credit, Commerce Bank, BNP, Credit Agricole. I mean, this is crazy. Bank of China, China Construction Bank, ICBC. Yeah, so this could be the black swan event. And if you don't know what that is, a black swan is very rare. They're usually white. And that's said in the stock market that they call it a black swan event. Basically, it's rare. Nobody expects to see one. And when one happens, the market panics and then starts crashing. Since then, the gross national value of derivatives in Deutsche Bank's balance sheet has indeed shrunk, but so has its equity market cap, which has never been lower, and the buffer to absorb losses is virtually nil. Deutsche Bank's market cap is now just $14 billion. That's nothing. There's actually cryptocurrencies with larger market cap. It's insane. Roughly the same as the recent IPO star Chewy, which makes sense, as we said 2 weeks ago. One creates dog shit, the other is collateralized by it. So, should things turn bad, it is virtually certain that Germany's taxpayers will once again be on the hook for most of important bank bailout in European history. But the biggest irony of all is that Deutsche Bank may actually have a chance of survival if only the ECB were to ever hike rates. As it stands now, however, with the ECB set to cut rates in the near future and possibly resume QE, the Frankfurt banking giant is as good as nationalized. Yeah, so taxpayers are going to pay for it. If not, central banker will print money, pay for it, and then it's the same as taxpayer pays for it because the inflation is the hidden tax. So, will it be the black swan? Obviously, there's some serious problems, right? Look at the similarities between Deutsche Bank and Lehman Brothers when it started crashing in 2007, 2008, and 9. Ever since then, it really hasn't recovered. Let's take a look at Deutsche Bank stock. This would have been the most epic short of all time for years, nearly a decade. Sitting at $8 right now. This is what it looks like on a weekly chart. This is back in 2007, May of 2007. And there you go. So I just want to talk about that, show you guys. Will this be the, the domino to start all the other dominoes? Not really, because I feel like everyone saw this coming, and Deutsche Bank's been in the news since 2015 for possibly going under, and they've done mergers, and they're going to do some sort of national bailout. Taxpayers are going to pay for another big bank failure. So it might not, and if anything, this will probably push more people into the U.S. markets. And, it'll probably go up for the next few months, maybe into next year sometime. So let's take a look at the U.S. stock market, then we'll go into crypto. So here's S&P 500. So there was a giant cup and handle. We did break out from that. I still expect more to this rally and more all-time highs. But for the very short term, we might get 1 to 4 day pullback, maybe 9. But either way, we're on technically we're on a 4 count, but a 9 count from previous lows. And usually the 4 and the 5 in the 9 count, according to this TD sequential. The 4 and the 5 tend to pull back, and then you get a higher 6 count, 7, 8, and 9. So possibly a little bit of a sell-off sometime next week. Maybe retest down. At least retest 2,964 on the S&P 500. And then it'll probably go higher because the Fed's going to cut rates. I think July 27th is the next FOMC. If they don't cut rates, the market will fall and pull back in a big way. If they do cut rates, it'll probably go higher. And they'll probably only cut 25 basis points, nothing too big, so they leave more bolts in the chamber. But yeah, let's take a look at the FANG stock, see if that tells us anything. Also, the job reports Friday. The market sold off. Well, for one, it was low volume, and two, it was because investors were actually hoping that we get bad economic data. So it locks in a Fed rate cut, so the market keep getting juiced. Well, the data was better than expected, and but you know what? They always revise these, and they could get revised by a lot. I don't even know why anyone pays attention to them. It's kind of like another tool to sort of manipulate investors in the market. FANG stocks are on a 7 count on the daily chart here. So 8, 9, maybe 2 more days of upside. I do not think it's going to break the 2640 resistance up here with my blue equilibrium line in the daily. And it'll probably get rejected and then it'll pull back. So we might close this upcoming week starting tomorrow. We might close it on the, lower, but it might open a little higher for Monday, Tuesday, Wednesday trading. And then Wednesday afternoon, Thursday, and Friday might sell off. And I'm only going to look at the daily charts. Let's look at the Russell. Yeah, the Russell's on an 8 count. And it also came up on resistance here. Major resistance. So I think a small dip, nothing crazy, and then maybe some more positive trade talks or some BS, and the Fed will cut rates by 25 basis points in the end of this month, and we'll start making new all-time highs again. I'm not exactly sure how bad the pullback will be, but we'll see. I mean, I'm not expecting anything too crazy. It's just that the FANG stocks are going to pull back, and it's going to pull the market down with it. Which may be a good short. Maybe an SQQ or something like that. Where's Boeing? I just want to look at Boeing real quick. Boeing's on major support. Boeing's had some serious public relations problems, and their engineers are getting paid like minimum wage, third world engineers. But still, guys, it's a war stock, so I don't think they'll let it drop. There's a lot of high tensions, currently, again, in the Middle East, so I'm too scared to short this. Tesla, I took profits from my short a while ago. Right now, I'm just looking to see if it's going to break this resistance up here around 235. And if it does, it might go a little higher, but it'll probably dip with the stock market this week. All right, let's take a look at gold. If it'll load. RSI is a little high. All the oscillators are a little overextended on the weekly. But if you look at this weekly, we also had a huge cup and handle on gold. There's a major resistance at 1350. Or not resistance. Major support. It was resistance. We broke that just recently last week, right? And this purple line right here, major support. Whatever happens, for the weekly here, we have some huge, this is Dragonfly Doji. We have a reversal signal here on the weekly with these huge wicks like this. A lot of selling. And they're smashing it. They're trying to keep metals low, because if metals keep going higher, it's going to signal to the market that something's really wrong. So they're going to smash it again, and we might revisit 1350 from 1400, but that's like the worst case scenario. I really don't think it's going to break below 1350. If it does, it'll be, like for an hour or something, like half a day. But that's a great buying opportunity, 1350. If it even goes down that far, we'll see. If we go to a daily chart, look at this volatility. Anyways, this was because of my last video, right? Trump's nomination. By the way, she might be a gold bug for that board. What's her name? Judy something. But so was Alan Greenspan. Alan Greenspan was a huge gold bug, and he was the one who started this monetary party, right, of low interest rates and money printing. So Alan Greenspan was a huge gold bug. It doesn't mean anything. As soon as they get into power or they're on the board, they're like forced. They're not, I don't know, maybe they're puppets, maybe they're just forced by the government, but I don't know. But they're not going to raise rates. They're not going to go back to a gold standard until they have to, until they're forced to. So the daily, a lot of volatility. It's hard to see what's going on here, but there is a 3 count to the downside. So I'm guessing maybe a continuation of this dip, this pullback. If 1400 holds up though until the next FOMC meeting, oh man, is it going to take off. But I have a feeling they're going to smash it like tomorrow morning, right on the open, or this afternoon, Sunday, when the market's open. And the price will revisit 1350. And that's great. Another buying opportunity, right? Let's go to the 12-hour. Although some buyers did step in. So I say we wait and see what happens Monday and Tuesday this week. I don't think gold's gonna just take off anytime soon unless something crazy happens. But maybe Deutsche Bank might set it up. I think some consolidation maybe. It's really hard right now, guys. With TA because the metals are really being pushed by fundamental factors at this point. Although I can make it. So look at this. We can draw a triangle, and it'll probably stay within it for a little bit, maybe a few weeks. Or they'll dump it and it'll fall down. Either way, it's going to consolidate. It's not going to just keep rallying, and then whatever happens, I'm bullish for the rest of this year, especially once we get more rate cuts. All right, let's take a look at Bitcoin. So the monthly is on a 5 count. And like I said, there's usually selling a slight dip or pullback with the 4 and the 5 and a 9 count to the upside. Although I'm starting to get the yellow candles, right? Which is warning me that it's becoming overbought. So the monthly is technically still bullish to a 9 count to the upside. So 4 more months of a possible upside. Let's take a look at the weekly. Weekly is back to overextended. It's on a 2 count. All the candles are still yellow according to my indicator. Although the heat map's not very red, so the weekly it's not telling me much. So let's go to the 3-day. The 3-day, well, we're technically on an 8 count. RSI is it's slightly oversold. 3-day is very neutral as well. Let's take a look at the daily. So I'm getting some buy candles, these light blue candles. These tell me to buy from that indicator. The RSI is extremely oversold on the daily. And the MACD can still cross back up to the upside. So that's interesting. Let's go to the 12-hour. 12 hours neutral, slight bullish. I mean, you could make a triangle right here, right? On this 12-hour. MACD, I mean, once this thing crosses to the upside, the price is likely to shoot up. So it might break out to back up. Will it make all-time highs? I don't know. But I know on the short term for this upcoming week, it might break up to the upside here. It's actually more likely to break up to the upside. And we'll start going back up into the 12,000s at least. Although these moving averages are they're starting to really diverge here. So at some point, again, they're going to have to come together. Let's take a look at the 6-hourly. So once the price gets out of the red Ishimoku cloud, I would say the price would have to get above 11,800. It could really start running. Or it could go and test 11,800 and then fail to break out. And then it'll break down, and then the price might actually start crashing. Let's take a look at the 4-hourly. So here's the deal. The 4-hourly is somewhat negative, right? It's making lower highs right here. And soon as it makes a new low, a lower low, and that's why I drew this and I posted this in the newsroom and it's free. You could click the link and go into WolfPack Cryptos newsroom, and I keep you guys updated with the price when I'm not making videos. So this is how you read this. I made this, right? 4-hour chart. Put a volume profile on it and a fib retracement. So I look at it like this. I wish, here, let me upload it and I could go to an interactive map, because that's hard to view. Did it save? Save it. Save it. Because I have the same trading view on the other computer. And then, there we go. It saved it. Alright, so where's the volume profile? Okay. So right now it broke slightly above my neutral range. And it could even test 11,700 and then break down and fail. Here's the deal. If it breaks below 11,000, to be sure, 10,970, I'm expecting the price to dump, to start crashing. If it breaks above 11,700, then it could break out and start running back up to the upside, maybe even make an all-time high. Either way, it's very neutral right now. It's trading within this range, this neutral range, right? And there's a ton of support below 10,900. But if it starts breaking below that, it's a good time to start shorting. Right now, it's just whipsawing around and trading within this range. There will also be a decent amount of sellers up around 12,800. Now, so right now, I'm just waiting to see what it does. So the neutral range is from pretty much 11,000 to, I guess you could say 11,500 to 11,700. The problem is if you buy now, it could still break down. You could also see this moving average right here, the 54. It's about to cross the 128, and that could also cause the price to dump, to fall back down. The oscillators are actually starting to become, I don't know. It's very neutral. I say let's wait another day. Let's see what happens tomorrow. I'll make another update video on this, and I'll post charts in the newsroom. But right now, I consider this neutral, and it's consolidating right now. And that's all it's doing. So, you know, it'll consolidate, and we'll see if it dumps or breaks out and pumps. Alright, guys. With all the news events, I don't know. I don't know if the elites think they can control Bitcoin and cryptos and then they'll let it go loose and go back up into another bubble, or if they will crack down with so much regulation that it'll It will gain them control, though. Either way, Tether, I think, has been still a huge part of this rally. And I still think, I mean, we had a decent pullback. And I think it's very neutral right now, and it could go either way. I still lean towards I'm waiting for that correction, for that ultimate short. But we'll see. Also, I mean, that one video I talked about, if central banks start going back to a gold standard or start using a gold-backed cryptocurrency, I still think that's very negative for Bitcoin and cryptos. But here's the thing. Cryptos are still good for capital flight until all the regulations, and all those regulations have started to come out now, like money laundering regulations against cryptocurrencies. So the capital flight idea isn't really going to work. The store of value idea, that works until you start getting gold-backed central bank cryptos or a gold standard. So I don't know, guys. You make up your own decision. I'm more bullish on gold and silver mining stocks. Go to my website. The discount is still available right now until tonight at 12. So that's about it. I mean, the Bitcoin shorts have been destroyed and clobbered. Here's the chart of Tether versus dollar. Dollar is blue on the bottom here. Tether is yellow. Both have been falling lately. So volume for fiat and Tether has been falling lately on the weekly. So that's another indication that the price might drop in a big way. The altcoins, they've actually been pulling back. These are weekly charts. So, yeah, I mean, I say let's wait. I'm going to wait another day, see what happens here. All right? Until next time, smash them likes, leave anything in the comment section. Please share my videos. It's the only way my channel grows. And, yeah, see you guys in chat room.